Over the last 2 weeks, the S&P 500 has sold off around 6%, and this has led investors to believe that a possible market correction could be on the horizon. And I want to go ahead and both break down and answer this question within today's video, talking about what we could be seeing in the future, taking some info from the S&P 500 seasonality chart, taking some info from other investors and analysts, seeing what their projections are for the rest of this year, and then also talking about some trade news, tariff wars, and possible rate cuts. So, I do want to go ahead and break all that down, and we'll go ahead and finish off this video by talking about some ways that you guys can survive a bear market if that is to occur, talking about dollar cost averaging and taking emotion out of trading. So make sure you guys do stay until the end of the video because realistically, a market correction is on the horizon, whether that is in the next 2 weeks, 2 months, or 2 years. It will inevitably happen. So that is some very valuable information to know. All right, guys, and before we do get into this video, as we are rapidly approaching 1,000 subscribers, I do want to always let you guys know that we have our free Discord linked in the description down below. We have over 500 plus profitable traders over there and over $500,000 in team wins year to date. Once we do hit 1,000 subscribers here on YouTube, we'll be choosing 3 free members to give premium lifetime access to. This will also include mentoring and the bullish handbook. So make sure you guys do join up. It is 100% free and take the chance at getting premium lifetime memberships. Alrighty, guys, and jumping into the S&P 500 seasonality chart here, you guys can see over the last 50 years, we have an average return of around 8%. And over the last 50 years, we actually have some pretty good consolidation happening in the first 3 months of the year. Now, this is just an average. This doesn't always happen, but it is looking pretty accurate comparing this to the 2025 S&P 500 chart. It looks like we have done a lot of this consolidation and mild dips here, and it looks like we could be heading towards a possible pump in mid to late March like we see often. And this pump coming in mid-March normally leads to, a larger move over the rest of the year. As you guys can see, taking off from around break even all the way up to around 4%, 5% by July. So this is obviously a great chart to look at and see where we are, compare ourselves for 2025 to what we have done over the past 50 years. I think that something very similar can occur, especially if these trade talks and tariffs are, worked out in some way. So I do think that looking at this chart at least will give you guys a little bit of clarity and understanding behind why the market may be moving in the way it's moving right now. All right, guys, and I do want to go ahead and break down a few bits of bearish news here, talking about what could be leading to this recent sell-off and what could lead to a broader market correction in the future here, talking about interest rates which have increased borrowing costs leading to market volatility as these small cap companies are trying to grow to profitability. Increasing these borrowing costs is really affecting them in that and slowing down that process. So that is obviously affecting them, which is in return leading to volatility within not only their stock price, but the broader market as a whole. And then also talking about disappointing economic data, not only with these interest rates not seeing a cut recently, but also talking about CPI and job claims coming in subpar. This has obviously led to some investor concerns, and this really could lead to a little bit more downside in the long term if these are not improved upon. So that is another thing to think about. But really, the most important here is going to be global and geopolitical tensions, and that is really going to be broken down simply into tariffs, talking about, our Chinese, Canadian, and Mexican tariffs. I do not think that these are going to be as bad as people are expecting. I do think that there will be some deals worked out, and I highly do doubt that we will see a 25% tariff on really, those 3 big countries that we have talked about. But if that is to happen, obviously, I do think that a market correction has a higher chance because those are not, really impacting the market in a positive way, at least the way that they're set up right now. Now, I do understand that most of that news was pretty bearish, but I do want to talk about a few bullish points as well, as we do have Tom Lee here talking about how he expects a 10 best day coming very soon. And what that is going to be is really talking about if you are to miss the 10 best days within the stock market over a certain period, how dramatically that affects your profits in the long term, showing that over the last 20 years, if you were to invest $10,000, you guys would have around $61,000 if you hadn't missed the 10 best days in the stock market. And then just by missing the 10 best days in the stock market, you would now only see a return of around 5%, cutting that in half. And then once again, if you're to miss the best 20 days within the market, and then once again, if you guys are to miss the best 30 days, 40 days, 50 days, and so on. So it is really talking about how important it is to stay in the market and really not sitting on positions. Now, if you guys are sitting on some cash, I am as well. I think that is a safe idea, but I think fully selling out of your positions when we are in a dip like this is really not a smart idea. So I would definitely take that into more consideration before making that decision. So he also does state that markets are oversold and pessimistic. A sizable rally is near. And I do believe that as well, talking about the seasonality as we are lining up with what we do get normally, talking about the second and third week of March, which is a pretty sizable jump to the upside. So I am expecting that, and I do agree with Tom Lee here. All right, guys, and to wrap up this video, I want to talk about 5 pros of buying during a bear market. Now, buying during a bear market is very important, and if we are to see a longer market correction or a crash ensue, I do think that these 5 pros will help you guys thrive through this bear market and really accelerate your guys' growth coming out of it into the next bull market. So, talking about these 5 points here is going to be discounted prices, which will lead to higher returns, dollar cost averaging, long term growth, and psychological resilience. Talking about discounted prices, obviously, if we are to see these prices fall, we can go ahead and buy these stocks up at a discount. So say a stock falls from $100 to $50. You buy it at $50, and then once we do inevitably return to all-time highs, you have now made 100%, and people are just now getting back to break even. So buying at these discounted prices are very, very important. And then obviously, once you guys do break those all-time highs and then move higher, you will see those growth numbers accelerate rapidly. So that will also lead into point number two, which was my higher returns. Obviously, buying at lower prices leads to higher returns in the long term. So I do think that eyeing some buys here is a really good idea, whether this is a dip or a long term buying opportunity. I do think dollar cost averaging, which is my third point here, will really help you guys out long term. I put $10 into every single stock that I own in my portfolio every single day. And now, whether you guys are adding $10 into your portfolio every day, $50 a week, $100 a month, or something else like that, I do think it is very important to dollar cost average, especially when the market is on a downturn like this. But not only buying at the highs when you guys are dollar cost averaging, but more importantly, buying at the lows. Not only are you guys getting discounted shares, you guys are getting more shares, and you guys are getting more shares at a discounted price. So once the price does return higher, you guys will see not only do you guys have more shares to get a better return on, but that lowered average did help your guys' positions out in the percentage category. So I do think that dollar cost averaging is probably the most important thing here. But talking about long-term growth, as you guys know, the S&P 500 has historically returned at least to all-time highs and continued higher over the last, sample size that we have. So talking about how no one has lost money if they have been investing in the S&P 500 for around 10 years. No one has lost money if they just buy and hold the S&P 500, guys. That is a crazy stat, and I think that is very important to realize when you're looking at something like a bear market, and that is going to tie in with my psychological resilience. As we do know that the market does take these dips and downturns and doesn't only go up, you guys need to have the psychological resilience to understand that the S&P 500 has done nothing but just shoot straight up, and then it takes a mild little dip, a 10-month dip, and then we have a 3-4 year bull run, and then maybe a 10-month dip, and then once again another bull run, and that has been happening for about 100 years now. So as we can see historically that the S&P has returned nothing but green in the long term, you guys just have to zoom out and open your sample size up to those better returns. And that in return will help with this psychological resilience. As we are seeing these market downturns, a lot of these portfolios are turning red, including mine, guys. I have lost over $15,000 in my long term portfolio, but it doesn't mean anything. I haven't lost anything yet because I haven't sold any of these stocks. I haven't realized any of these losses. So there is nothing wrong with losing, this $15,000. As I am putting more money into my stocks, I am lowering my averages, getting more shares in. So once we do see this next pump back up, whether that is in the next few weeks or the next few months, or maybe by next year, we will see a better return come out of my portfolio in the long term. Although this is negatively affecting my portfolio right now, in the long term, I will see some great growth coming out of this. Alrighty, guys, and that is really going to be it for me today. I just want to let you guys know a little bit of the market sentiment right now. If we're sitting on the bullish side and the bearish side, we're kind of on that teeter-tottering side of the market right now, where we could be heading to a lot more downside, or we could be returning back to all-time highs within the matter of about a week. So it is important to keep all of the information that I talked about today, and especially those 5 pros that I just talked about, very close and dear to your guys' notes or whatever strategy that you guys may be using within the market. And that is really going to be it for me, guys. So make sure you guys do check out the link that I have in the description down below. Make sure you guys do like and subscribe as always, and I will see you guys in the next video.